How to generate consistent income trading options. This is a beginner's tutorial on options trading strategies. My name is David Jaffe with beststockstrategy.com, and you can go to beststockstrategy.com, enter in your email, and receive $400 worth of free training. A lot of students tell me that that training is worth thousands of dollars, and I can tell you that even though I graduated from an Ivy League university, I worked in investment banking for 5 years, I've completed and worked on over $5 or $10 billion worth of transactions. The only way that I would be profitable is by selling put options. So I try to make things as incredibly simple for you so that you can learn, and I'm going to tell you how to generate consistent money by selling options. All right. Here's pretty much the strategy in a nutshell, okay? We have Facebook that right now is trading at 175, all right? Its trading range over the past few weeks has pretty much been around 182 to around 170. I know that it fell below 170, but for the most part, it's been trading in this range. So what I would do is I basically wait until Facebook falls to around 173 or 172. Then I would sell a put option with a strike price of around $157.50 or $158. I would collect $1 or $1.20 in premium, and I would choose an expiration date that's around 4 to 6 weeks out. That's pretty much it. And one of the great things is you get paid for making good decisions. And the way that we get paid is by being extremely disciplined. I only have positions on and around 6 securities at all times. I have positions on in Facebook, Amazon, Boeing, Lockheed Martin, a gaming stock like ATVI or TTWO, and then usually a banking stock like Goldman Sachs or PayPal or Bank of America. That's it. And I only trade 6 securities, and I ignore everything else. One of my students tells me to look at Netflix or Nvidia or Tesla. I'm just like, hey, it's not on my watch list. I don't pay attention to it. This is the most efficient way to earn consistent monthly income in the stock market. Less is more. If you want to make a lot of money, and I made 2,500 trades in 2017, and I was profitable on 95% of them, you need to guard your attention and your informational sources and make sure that you are extremely disciplined and you become an expert in an extremely deep strategy where you know everything about it. And that's what I teach people. You can go to beststockstrategy.com/memberships and sign up for the real-time trade alerts. And around 80% of my profits are made by selling put options. I'll give you another example. Lockheed Martin, it's trading at around $320. All right, I know that earlier this year it was trading around $360, but right now it's trading at around $320. Its trading range over the past few weeks has been at a low at around $310. I know that it's traded to around $305 or even around $300, I believe, and a high, I think it only got up to around $325. All right, for me, I'm gonna wait until Lockheed falls to around 312. And why did I choose that number? Just because I feel comfortable. I know what Lockheed has been trading at over the past few weeks. Then when it trades to 312, I will sell a 295 put option with an expiration of 6 weeks in the future, and I'm going to collect around $2.20. I'm going to sell a naked put option. I'm not going to use a vertical because a vertical put option is going to motivate me to sell too many contracts to compensate for the lost income that I'm paying to buy that lower price put option. Plus, when I sell a naked put options, it's much easier for me to manage and roll that position forward in the worst case scenario where that option ends up getting challenged. So I usually only trade naked options. The only time I'll use vertical options is on a super expensive stock where I want to manage my buying power reduction. An example will be Amazon. If I'm going to sell a $1,700 put, I'm also going to buy like the $1,550 put. That way I don't have $1,700 worth of risk. And I'm not concerned about the risk aspect. I'm more concerned about the buying power reduction. So I don't want to reduce my buying power by 20% of $1,700 for every contract that I sell, which will mean that every contract is $17,000. For every naked option that I sell on Amazon, I don't want to reduce it by $3,400. I'd much rather sell a vertical, turn it into a $150 stock, and then reduce that buying power reduction from $1,700 all the way down to $300. All right, because remember, options, it's only 20% of your buying power reduction, whereas for stocks it's 50%. So in this Lockheed Martin example, I'm going to collect $2.20 a share. That means for every contract that I sell, I'm going to collect $220. That trade is going to be profitable around 95 to 98% of the time. And if it's not profitable, I'm just going to roll the position. Sorry, that's my toddler. I think that his mother just came home. But in any case, that's how you make money and generate consistent income in the stock market. This is David Jaffe with beststockstrategy.com. If you have interest, then subscribe, like, comment, and share this video with your friends. If you have any questions, you can leave a comment. I will respond to every single comment. You can go to beststockstrategy.com and enter in your email and receive $400 plus of free training. And I'm here to help you. So if you have any questions, let me know. And thank you for your attention.